space, because I think in the next, like I hear people's like Tesla, not Tesla, like Elon Musk and Jeff Bezos' outlooks, and they're looking at having a big footprint on space in space, in the next 10 to 15 years. So that was a big reason I put that in there. I had to travel here because I thought it would take that long in order for travel to recover from the current pandemic. And I wrote gold in here, but again, I'm sure he's gonna want to move this. So as we sit here, what are your arguments against this? Are there any of these other things on here you think should be moved to a bigger time frame? What do you guys think?
All right, I know I get a bad reputation for being the gold man, but once we come out of this current pandemic, I really like copper. I like copper a lot. The nickname for copper, it's called Dr. Copper. It's essentially a barometer of how the economy is doing, right? So eventually we're going to get out this slump. Essentially, whether you're bearish or bullish, at some point things will get back to normal, right? The question is when. But Tesla, can Tesla operate without copper? Can any EV operate without copper? Can you have running water in your buildings without copper? Can any construction go on without copper? Copper is one of the most versatile commodities out there. So I think the stat was it takes 30 to 60 pounds of copper to run an electric vehicle. So going forward, there's going to be a big rush into copper, especially 10 to 15 years. I like copper a lot. That's one of my favorites on this list.
But do you think, and I put copper there and in the beginning, but I put it when the next 1 to 5 years, because you spoke about the EV. So, I mean, everything in red here, just, for context, everything you see in red will mean that it still be important in 10 to 15 years. However, it's here in the 1 to 5 year for copper, because, if you're really bullish on the fact that it's going to be in the EV and all that, then my argument was you should start investing it now for the next 1 to 5 years. Do you think it won't blow up until later on, or?
Now, I'm not trying to play both sides, but copper could be in 1 to 5, 5 to 10, 10 to 15.
And that's why it's in here. So if it's here in red, it means it's still going to be important in this time frame and in this time frame. So it's in all three time frames. What do you got, shirtless man?
Nothing. I have to keep this muted because my kids are rocking it on some meth right
now. I know, we heard them. What about some of these stuff in red? Like, let's work it from here then. 1 to 5 years. Do you guys think, is there anything we need to add to this 1 to 5 year chart, or anything we need to take away from this 1 to 5 year chart?
I have something. I just want to give him an opportunity.
He's always got something, just so you know.
For sure.
Well, what you got?
Well, I think it looks pretty legit.
Yeah, again, I didn't get this from anywhere. I made this before our last conference, and I just made these 3 slides in like 10 minutes, and it was just off the top of my head. So what I wanted to do here was fix it and also add names. Like if you had particular stock names you feel could go into these segments, we would add them on here. So
what's your favorite? You said it looks legit. So what do you like? What stands out to you?
So that have you seen the Taiwan semiconductors? That was one that I'd been watching for a while. I debated on jumping in it, and then all of a sudden it like skyrocketed 1 week. So I kind of kicked myself in the ass for not doing it. But I was nervous about doing that because of the whole China thing. So that's the only thing that's kept me from actually like jumping into a lot of like 5G and semiconductor areas.
So, that's like, I put it in the 1 to 5 year mark because it's like what everybody's talking about right now. And, there's places that are already doing 5G. And semiconductors, the reason Taiwan Semiconductors, their thing skyrocketed. A lot of people think they're from Taiwan, but it's an American company. They're just named Taiwan Semiconductors. And they're about to create a plant in the United States. So when that news came out, that's when their stock skyrocketed. And then it got another like 5 or 10% boost when Intel, when they when they said news that their 7 millimeter nano chip was going to be delayed again. That was really bad news because AMD, their 7 millimeter nano chip has already been put out there. However, there's a lot of, when it comes to semiconductors and chips and things like that, there's like things that are publicized that people see and they don't understand. AMD's 7 millimeter conductor, their chip still has the same specs as Intel's 10 millimeter chip. So just because it says 7 millimeter doesn't mean like they're really far ahead of the game. Like some of the specs in that chip still have 10 millimeter specifications. I know I sound like a nerd right now, but whenever I look into these things, like I really feel like I need to know everything about it before I put money into it. You know what I mean? So there you go. There you go. So just to start off.
Hey, I'm not trying to jump, but I didn't get to ask. I had an options question since you do a lot of, or you know a lot about options. So when you're talking about like breaking even, right? So if I'm buying one contract, right, for example, and it's a $200 call, and the actual stock price is like at 175 right now, and it does go up, that break even is only applicable to me if I'm trying to exercise that call, correct? Or is that like if I wanted, I'm going to make profit regardless if it went from 175 to 190 but didn't get to 200 and I sell it, I'm going to make that profit from that. Am I right in that or no?
That's a vague question, and the reason is that it all depends on what premium you're going to sell the option at before you exercise it. So are you talking about, like, let's say you buy a call, you can get rid of it before expiration date, but by getting rid of it means you have to sell it to somebody. So you have to sell it to somebody for more than what you paid for it in order to make a profit on it.
Mm-hmm.
So the only time the break even, you're right, it only matters at expiration. However, like when you're selling it, in order to break even, you have to, make what you put into it at least. So that means somebody has to buy that option from you at least at the price that you paid for it or more. Does that make sense?
Right. No, I mean, that makes perfect sense. So for like the past probably month, I've like just tried to learn about options trading, and I don't ever really do puts. I've done one put and I kind of got burned on it luckily it was only like $80. But I've only done, huh?
He said it'll
I like gambling, so I got to do it. Yeah, it's straight gambling, so I wouldn't recommend it unless you're willing to lose it. But yeah, so I've done it, and I've been lucky enough to where I don't want to call it flipping it, but I've flipped it for more than than I bought into it for on all of them that I've done. And like a current one that I'm in right now is a Microsoft one. I have a Microsoft call, and it's for I can't even remember off the top of my head, but I got 2 contracts in it, but they're about 500 a piece. But already I'm up, about $400 in it, and it's only been 2 days. So I'm hoping it gets to, I think it was like 220. I think it was a 210 call. I made a 210 call right now, and it's at 205. That's what it was.
That's a big.
But I bought it 199.
Yeah.
Huh?
It's a big move, and you might get there, but again, you gotta. It goes with sentiment. So for Microsoft, if something comes out where the president, they block them and they can't buy TikTok, the stock is going to drop a lot, and vice versa. If there's good news, the stock will pop. So right now, your stock is going to be volatile. There's implied volatility in your stock because of that news that people are waiting on. What's going to happen with TikTok? If they don't get,
and I bought in before the whole TikTok even was a thing.
yeah. So and again, it depends on your date. Like how far, when does that expire?
It doesn't expire until September 21st.
So you have some
28th.
time behind it. Yeah, you have some time behind it.
Yeah, so I try to buy it pretty far out if I can.
Yeah. But did that answer your question?
Oh, it did actually. Thank you. Yeah, and another thing. So Steven got burned. He didn't get burned. So Steven got he had a call in it was in I think Coca-Cola, and he was above. He was in the money, and he let it expire, but it ended up selling it automatically for him. But he was wanting to exercise the option, so he should have messaged them and told them he wanted to exercise the option. But is there any way that what would make your option exercise without you having to do that? Or what would be the benefit of you actually exercising your option? Because I was confused when I first started this, and when I tried to exercise an option, I was thinking that, I'm going to get these 100 shares at X price, and then after I get those 100 shares at this low price, then when it gives me those 100 shares in the company, I'm automatically going to get those 100 shares of what the price of the per share is at the time, right? So I was going to make $8,000 in it, right? But it wasn't. That's not the case. I don't know how that really works.
No, it doesn't work like that. It's very deceptive when it comes to that. But
yeah, I know.
And a lot of it is also the premium. The premium it goes into it as well. So you have to make your money back plus that premium that you paid. I would have to see where he got burned, but there's I'm not sure about Robinhood because I don't have Robinhood. I think that's what you guys are using. There should be an option that says that somewhere in there, the settings or something like that, where you could turn off automatically exercise. You have that liberty. It's your call. You know what I mean? So there should be an option somewhere where you don't have to automatically exercise, but you have to be on it because there's somebody on the other side of that contract that is waiting to do something with those shares. So the stock market really doesn't want those shares standing idle at all. So it has to be something that happens right away.
I would also chime in and say, be careful with Robinhood, and the reason being, they started that whole business model of buying and selling for free, right? So buying and selling equities and transactions for free. But the way they make their money is selling the data, and you are the data. So you provide information basically with your calls and your puts, your options, and what you buy, and your essentially your routine. And no different from Netflix. They analyze that and they sell it to the hedge funds. So a lot of times before they even execute your order, they're selling the data first before they even get to your order. And that came out in the news. I don't know if you remember, but in March, Robinhood crashed. It had a lot to do with that type of business. Whereas other brokerages, they have an obligation, and I think being that they've been around longer, they're held to the letter of the law by the SEC to, hey, if this guy wants options, give him his options, execute right away, and there is no selling of the data, or at least no story has broken out that they're selling your data. So I would just be careful. It can mess up your timing, is what I'm getting at. Especially with these markets today, is very time sensitive.
I appreciate it.
Yeah, I think one of the big keys and really not the most important thing, but a big thing to remember is that there's always another individual not trying to lose on the other side of that option. So it's not like a slot machine where it's just you versus the machine. There's always another person on the opposite side. that's not trying to lose. So just keep that in mind. So I put Taiwan Semiconductors here. Copper, we agreed, can go here. Fintech, I think I'll add Square on here. I think Square is a good fintech company. I could add Apple because a lot of people are using Apple Pay. For healthcare, I'll throw in AbbVie. Developed markets. So for copper, this for you, for copper, would you say physical copper? Would you say purchasing a derivative like a ETF or something like that?
That's the beauty of it. So you could do an arbitrage type of play. So Tesla, right? That includes Tesla. That includes construction companies. So Skanska, that's the biggest one I can think of
How you spell it?
now. Skanska, something like that. Something along those lines. I don't know.
Gangster.
So many things that use copper. That that their product is based off the price of copper. So construction is a big one.
So for construction, I'm sure the home builders would benefit.
There you go. Housing market, copper. You cannot have a house without copper.
Okay.
You can't do it.
What about 5G? What plays do you guys have for the 5G? Anything? On here I could throw Verizon. Nah, Huawei. Nah.
You're gonna do well though.
Verizon. What other 5G plays y'all got? You got anything for 5G? Obregon, you got anything for 5G?
AT&T for sure.
You got AT&T. When we say these, we're talking about the
AT&T.
Yeah, we're talking about the stock. So these are like we could even delete these instead of putting Sprint on there and put phone companies. But another thing to benefit from this is study somebody has to put the towers up. So whoever's putting up those towers, and then another thing is the phones.
Also, I want to throw in there that everything on this list is a copper play. Everything. It is.
This guy loves copper.
I didn't even think about it until he started saying it, but he's right. Everything's like legit. Everything has copper, really.
Right. All the doctors' instruments and tools and things of that nature. I'm pretty sure they have some copper plays. That'll go into healthcare, developed markets, semiconductors, chips. I'm pretty sure they use copper.
His rap name is Big Copper.
Nah, because you guys called me Gold.
They call him Big Copper.
You called me Gold too, but
I like it when they call me Big Copper.
But by the way, Gold should be on this list. So another discussion. But 5G antennas, right? So a lot of antenna, as we say in the military, SL3 gear, copper, straight up copper. Somewhere in that walkie-talkie or that antenna is going to use copper.
So I'm putting biotechs on here because I think biotechs, they're getting big now, but I think within the next 1 to 5 years, biotechs are just where the pharmaceutical companies are mixing with technology in order to get things to the public faster. They're identifying, cures and things like that faster. So I think biotechs are gonna, help us out in the future. And I think it's in the next 1 to 5 years, it'd be a good investment. So you can look at different biotech companies. There's even a company called Biotech as well. Um, so I think the companies that are in this run, even if they are not the first to act, I think the fact that their names are getting publicized out there as players in it is still going to help their stock. Do you guys agree? Disagree?
I agree.
I would also add in this list precious metals, gold, silver.
Yeah. So I mean, we could get rid of.
You got to get rid of something?
Nah, just instead of having copper on its own, we could just put precious metals on here. So there you go.
You could. I'm so bullish on precious metals. You could turn into 1 to 5 days. You'll see a price movement. You should be in a positive direction. 1 to 5 days.
Yeah, I'm buying copper here in Australia. I mean, I'm buying silver, some silver coins here in Australia. I'll share them with y'all in the next conference we got. We can look through them.
Please look at the gold and silver for year to date. It's already outperformed the market as well. So
yeah, so I mean, if we're gonna talk about that, we could even exit here. Could even come here. So let me see.
Hey, is there a multitude of like different copper, I guess it's like companies or tickers, or is it just like you got one ETF and then, is there like 1 or 2 copper companies?
Nah, so like there's always ETFs, but one thing you could do, because ETFs are a compilation of different companies. So this is what I recommend with any ETF. My recommendation is don't buy any ETF unless you don't want to look at the market and you don't want to study and you want to be lazy. If you want to actually do work and you're going to do work, you could look at those ETFs and just pull out any companies you want and build your own semiconductor ETF, build your own copper ETF, build your own gold ETF, because gold ETFs are just comprised of the ones that are building, the companies that are mining the gold, the companies that are transporting the gold, the companies that are selling the gold. So you can just pick a few winners instead of having all of them. Any ETF is going to have winners and losers. But if you can create your own with that as your, like looking at that list and picking your winners from there, I think you'll be more successful and you won't have to pay whatever it is. But this right here is just a chart of gold versus the gold and silver versus stocks. So let's look at it. So the S&P 500 is in red, the Dow Jones is in blue, gold is in gold, and Dow Jones is in blue again. So as you look through the chart, like historically, gold has really outperformed, the stock market. And this is dated from July 31st, 1970 to July 31st. So let me change this date, and I'll make it from.
I can only see the PowerPoint, so.
Yeah, it didn't pull up your chart.
New share.
Screen sharing is pulled.
Can y'all see it now?
There it is.
Got it.
So from July, let's see, let's see from 2000.
We could do beginning of the year as well.
So this is from 2000 till now, and gold is in gold, the S&P 500 is in red, and the Dow Jones is in blue. Silver is in silver. So as you can see historically, gold has outperformed all of them. There are times where silver has gone up, and the reason this happens is that at certain points, people can stop thinking they can afford it, or they think it's gone up too high. So the ratio between these will change, and that's another chart we could look at. But silver ends up outperforming gold most of the time because people start thinking that gold got too expensive, and in order to keep buying it and think that feel like they're still getting precious metals, they'll jump onto silver, and that price keeps running up. So this is just he's very bullish on precious metals, and this is a reason why. And when he's talking about precious metals, he's not like, he does the ETFs. Or I don't know if he does the ETFs or the actual miners and all that, but
man, I don't know how deep in the rabbit hole you guys want to go, but
not that deep today.
not that deep. All right. Definitely get physical. Get physical before you do anything else. Nobody's saying don't do stocks. I have stocks, right? I like Apple and Tesla at different times of the cycle. I'm not going to be bullish all throughout the cycle. But with that being said, just make sure your portfolio's hedged. This is not a game of football, kind of, but it's more like basketball or soccer. So imagine a player who has to be both good offensively and defensively, right? And you want your portfolio to be like that. You want it to weather all storms. So bull markets and bear markets, and gold helps hedge your portfolio. Everybody thinks about the market only going up, so you got to be ready for both.
Yeah, and a big thing behind this thought process is another thing you could throw on here. That's it would be something like cryptocurrency, and these are just hedges. If you don't know what a hedge is, it's just basically insurance or protection against your investment. So if there's a lot of signals out there that point to money disappearing. You've seen it now. It's always going to happen. It's going to happen eventually. And I'm not talking about currency. I'm just talking about the dollar disappearing. If you think it can't happen, recently it happened in India. People just woke up to news that they had till a certain date to return all of their physical money in order to get a cryptocurrency equivalent. And if they didn't return it, they were, screwed. A lot of people did get screwed just because they didn't have access to the media. They lived like places, remote locations with no, access to radios or internet or anything like that. So they didn't even hear news that they had to return all their money. So you see it now, especially the people that are in the States. There's a lot of places not allowing you to pay with cash because they're saying there's germs on it and things like that. So, they're forcing people to pay with things like Apple Pay or things like credit cards. So that's another reason in the 1 to 5 year that I put fintech on there, because that we're rapidly moving towards that, and it's just been accelerated. Yes.
Obregon, do you mind sharing your story of at Rebel?
We got 10 minutes left. Go ahead, Obregon.
Yeah, so we got here in March. Long story short, the currency rate was at 0.55, so virtually everything was half off. So just spent a lot of money, got a lot of stuff very cheap, and should have taken advantage of it a little bit more, because 2 months later it was back at almost 0.71. Yep. After the stimulus check.
Yeah, so little by little, the dollar it's been going down, and it's more and more reason for the Federal Reserve to just say we're done printing this currency. There's already, you could research it. There's talks of the Fed already trying to formulate some sort of Fed coin, something called a Fed coin, that would be like our own version of cryptocurrency in the United States. He brought up a good point. There's a lot of reasons why we can't go 100% to that, because technology is not 100% sure. Things go down, power goes out in places, so we can't 100% switch to that. So that's where having silver, things like silver and gold, things that are not just a piece of paper, can have value for you. So that's the reason where he's always been into it. I'm starting to get into it. I'm trying to make at least 10% of my entire portfolio, physical silver and physical gold. So I'm buying the silver. I'm getting it at a good discount. We could do a class on silver and gold as well if you guys want, just buying it. He knows a lot more than me, but I've been doing my research as well. So if that'd be something you guys be interested in, just let me know. We could do something on that. We got a thumbs up. We got 7 minutes and 37 seconds. What you got?
Oregon, what do you think? And I just really want your opinion. This is not like a setup question. What do you think moved the currency that much in such a little time? What's your personal thoughts?
I think it was a combination of the stimulus checks and the printing of the money in the U.S. and also Australia being able to cope with COVID a lot better than the United States.
Yeah, that's a big thing. You can look at the way our currency is, on charts compared to other currencies. Ours is hurting right now. And a lot of it is this money being created out of thin air with the Federal Reserve and their unlimited amount of money that they're creating. A big theory I have, him and I talk about it all the time. There's days where the stock market will be like red, like down 3% or 4%. Pre-market or after hours, and then all of a sudden, the market will open and it'll be up 3% or up 4%. And there's not that much that can move the market a lot like that. It's not a natural thing when the market moves that much. So I told them that my theory is that the Federal Reserve is keeping this market afloat and has brought us up. It's also giving confidence to retail investors to stay in. However, there's nights where I'll be up and I'll be watching the market and it'll drop like 3 or 4% in the red out of nowhere, and then out of nowhere it'll jump right back up. And I'm talking about the indexes as a whole, not stock. And the only thing that can move the indexes that much is a lot of money. It's not just like he decides to buy 3 shares of Tesla is going to move something. It's not like that. Like in order to move that 1% or 0.1%, it takes a lot of volume to move the money. And volume is money. So my theory is the Federal Reserve is like flooding the market with money, trying to keep it inflated and keep it from falling. Because a lot of other countries around the world depend on the U.S. dollar. We're the supreme currency of the entire world. Conversation for another day, but China's trying to take that spot right now, and they're positioned to. So that's a big reason we're trying to keep our market alive. There's Hong Kong and China, like China as a whole, they're trying to become the superpower, and there's one of the biggest initial public offerings ever is about to take place, and it's not going to be in the United States. It's going to happen in China. So the biggest tech company ever to ever do an initial public offering on the stock market it may not even be available to us to invest in it in America. It's going to IPO in China. So just think about that, like something that's never happened in history. Any big company that's ever even small companies that wanted to IPO, they've always done it on the New York Stock Exchange or the NASDAQ in Chicago. So just keep that in mind. That's just my theory. What do you think?
I think that's a valid point. The world didn't realize what we were doing to each other and a lot of times internally to our country, right? And the reason I say that, try not to stay political, but always remember politics and money actually do go hand in hand. With that being said, we realized a lot of the supply chain came from China, right? And we didn't realize how much we depended on them until we needed certain PPE gear and things of that nature. And we kind of realized, I'm not going to say who was sitting in power, but we kind of realize our critical vulnerabilities, so to speak. So with that being said, look for a lot of tension, obviously, right, between the two world powers. But what does that mean? That's going to come down to the currency. So we currently have the reserve currency of the world. If you look at, not going to get into the rabbit hole, but if you look at the IMF, they kind of determine who the reserve currency of the world is, and it's a basket of stocks. 50 or 60% is the American dollar, but every year it's been dropping. And every year the yuan or the renminbi, I say the yuan. The yuan has been increasing. So we have to be very careful with our currency, and we shouldn't just print and go into debt for no reason. Like, no different from your personal finances. There's always somebody on the other side looking to capitalize. So these are very crucial times. These are very exciting times, I think, to invest. So a lot of swings to come.
Hey, great point. We got about a minute and 47 seconds left. I think we hit the 1 to 5 year pretty well. We could hit it again, in future. You guys could actually bring some stocks we could lay down on there. Anybody watching this that has thoughts on the chart that we made, leave it in the comments below. Whatever you feel applies to the 1 to 5 year. What investors should be looking at if they have a horizon of 1 to 5 years that they feel their money's going to be in the market. Every little bit helps. You never know if you're 100% right, but the more research we do, the more, the percentage of us being successful increases. I don't know everything. He doesn't know everything. But, we do our research and we try to apply, and it helps us out. It helps us be successful. A big problem right now is that there's a lot of people being successful in the market right now without research. And it's just because the market has gone up and they haven't seen pain yet. So that's one big thing I'm looking for. Like, once, the market corrects, every 10 years, the market drops 50%, 40%. Next time that happens, I want to see how these people react to that. But until next time, I'm out. Unless you got some. All right. Mills, thanks for joining.
Hey, appreciate it, gentlemen.
I hope this helps. Hope every little bit helps.
Absolutely.
Thank you, gentlemen.
All right. Take
Okay.
care. Right.